Surprise, surprise. If you're elderly and you rely on Social Security, you're about to get screwed over again. Now, not to try to put on a negative tone, but here's the problem, guys, is that Social Security, although they give you a raise, you could actually still lose money.
Where is it? Where's the rest?
And here's how. All right, so a recent article just came out where they're talking about Social Security and how it's changing. They're saying in 2024, they expect there to be a raise. They're going to decide in mid-October when to do that. However, they're going to feel more like a loss instead of a gain because of the fact that they're only probably going to raise it at roughly about 3.2%. In fact, so those of you that don't know that Social Security, they actually are supposed to keep up with inflation. So they look at the consumer price index, see what's happening, and they say, okay, if inflation went up 6%, we should raise up 6%. This is why they've been messing with the inflation rates for the last several decades for this very purpose, because when they have to pay more for Social Security, which is going more bankrupt, they're running out of money. So look at here, 2023, they had a hefty 8.7% cost of living adjustment. That's what COLA means here. The largest increase in 40 years. But looking at this year, they're predicting about 3.2%. Now, you might say, well, good, at least they're giving me a raise. At least I'm getting something. However, does that actually keep up with inflation? So here's something that's interesting. That's talking about there's inaccurate data. So for example, the one thing that's not included in the consumer price index, which by the way, there's a lot of things not included, but one of them is the fact that Medicare, which of course most seniors are going to be having, if not all, have Medicare Part B and D premiums, right? So you pay for Medicare and you also have Part D, which is dealing with things like prescriptions and whatnot. Well, guess what? They say that if you look at the last 23 years, for every $100 in benefits from 2000, it only buys $64 worth of goods and services today. So if you throw in Medicare costs, right, the rising healthcare costs, which are more than inflation they're reporting, the problem is $100 now is only worth 64. That's a 36% reduction, guys. That is a big, big deal. And so, of course, they only calculate this looking at July, August, September, but it doesn't look at the previous months when we had higher inflation earlier in the year. It's just started to slow down now. But again, they're looking at these last few months, which of course show less numbers, less data. Now, what does that mean for you? Here's the problem, guys. It's like if you look at an inflation calculator like this, so they say that inflation really, the last 23 years, has been roughly about 2.3%. That means your $1 is supposed to be worth $1.69. So they're saying that inflation hasn't even doubled yet, according to the government statistics. The question is, do you trust the government to tell you the truth when it comes to inflation, especially if it means they have to keep raising Social Security benefits, which could deplete the accounts faster, ticking off a bunch of voters that vote for them as politicians, right? So of course, they've been messing with this for a long, long time. Let me show you right here. So if you go to shadowstats.com, you can actually see that consumer inflation here has risen quite a bit. So they show you the blue line is the 1980 measurement of inflation, right? This is what it was before all the politicians started messing with it. And by the way, it's both sides of the aisle. It's Democrats and Republicans. Both have been doing this. Reagan did it. Bush did it. Junior and senior. Obama did it. Clinton did it. They all been messing with these numbers, okay? But here's the problem. The red line is what they're telling you it is. Notice that since the 1980s, when there was high inflation in the early 80s, all of a sudden, when you got to the mid 80s, it started digressing a little bit. They started to separate from each other a little bit more and more, until really the last decade plus, there's been about a 7% discrepancy between what they report versus what it is. That means if they report 3% inflation, it's really 10% inflation. Here's the thing, guys. I know that it's different for every person. We all have our own personal inflation rates, our own personal circumstances. Some of you might be more, some of you might be less. But think about this. If the average inflation rate's 2.3% and it's actually 7% more, does that mean we're closer to 9%? What does that really mean for us, especially after 20 years? Because guess what? If you start taking Social Security, say at age 66, did you know that a large percentage of you have a good chance of living past the age of 90? That's 25 plus years. Well, if it's 25 years, that's kind of like looking back to 23 years of just talking about. So what does that look like? Now, I already talked about that if inflation is only 2.3%, a dollar is now worth $1.69. Well, what if we made that, and I'm even going to go less than that 7%. I'm even going to go at 9%, right? Let's just say it's 9. I know that sounds ridiculous because the government's been brainwashing you for so long that these numbers have been accurate, but they're not. By the way, you'll notice that they always show different inflation numbers, and then they adjust it later on. They'll even say that about the unemployment rate. They'll say, oh, it's this much. And then a few weeks later, they say, oh, we were wrong. It's actually this. And often it's not to the better side. So anyways, let's say we make it 9%. That $1.69 now becomes over $7. So what that means is your dollar 23 years ago is now worth about 14 cents. I'm going to go against what the 1980 adjustment for inflation has been, right? Let's just say that's not 7% more. That would make it over 9%. Let's just make it 8%. Well, that $1 is now worth 5.87. Well, in relation to that $1.69, that means it's roughly about quadruple of what we had before. So let's just say it is only 8%. That means if it has been adjusting 2.3%, like they say, that dollar is now worth $1.69, but it's really 5.87, that means it's 3.5 times more than what we thought it was. Guys, it was already bad before. Like when they said that inflation was actually worse, right? Just taking in Medicare and Medicaid, they said it was worse. Well, that worse meant it was about 3.5%, 3.6% inflation. But if it's actually closer to 8%, more than double that, what that really means is now it's 3.5 times worse, right? It's worse than what the inflation was before. So it wasn't just losing 64%. It's now it's losing over a third, over 2/3 of your money to inflation. This means that roughly you've got probably about 30% of your money left. That's the problem, is that they say inflation is X amount, but if now you're looking at your Social Security and let's say you've been taking it for the last 23 years, you're going to look at your life and say, well, my goodness, even though I've been tightening the belt more and more and more, and yes, they're giving me raises, but with the way prices are going right now, I have less and less freedom because it's really more than 3 times worse than what they're telling me it is. Or really, inflation's 3 times worse than what they're giving me raises for. This has also happened for people that right now, even if you're not on Social Security, if you've been employed at a company, everybody keeps telling you about this whole 2 or 3% raise at work every single year. But then you're realizing now we got to have 2 jobs, right? Either I have to have 2 jobs myself or have to have my spouse working along with myself to live the same lifestyle because they're lying about inflation. And they're only doing that because they want to make sure that Social Security doesn't run out of money faster than it needs to. So they're really just saying, hey, we give you a raise, but only part of that raise. You only get a little bit of it. This is why also in Europe right now, Turkey, Turkey's had crazy inflation going on right now. We've seen that in all the other parts of Europe. They're talking about 10% plus inflation right now this year. Well, how is it we only have maybe 3% inflation when the rest of the world's at 10%? Is it because the US is better? Or is it because the US is kind of like China and we're just lying about our numbers? I don't know. It could be both, right? It's hard to say. It could be the truth could be in the middle somewhere, right? I'm not saying I'm a big conspiracy theorist and that it's all horrible and that the government's intentionally lying to us. I'm just saying that they've adjusted numbers over time to make it easier on them, to make it easier on them, making you feel better about you. But in truth, your day-to-day living has gotten worse and worse. The answer is not to rely on Social Security. Yes, I think it'll be there, despite some popular belief or even conspiracy theorists that say Social Security will be gone.
I don't think so.
I think there'll still be Social Security. I think the baby boomers, even leading myself, my Generation X, and of course the millennials, will say, well, we've been pumping money in this. Why lose it, right? We're in this together. Let's just tax the rich more. We're all in this together. There's going to be things to keep Social Security going. But I am here to tell you that Social Security will not be the thing that is the answer. The answer for you is to get your money working harder to make up for the fact that Social Security isn't working hard enough to keep up with inflation. You need your money to beat inflation. And you can't do that in the stock market. Because the stock market, truthfully, you're lucky to get 8% a year, which is about what we're talking about inflation is. We need something working harder than that. That's where we look at things like alternative investments, such as real estate investing. And I don't mean investing just gambling in real estate, not knowing what you're going to do, but actually going into real estate where it has not only kept up with inflation, but when you factor in cash flow that's coming in, when you have good cash flowing properties, or you're lending your money to real estate investors that are doing other projects with it, whether they're lending it to create their own properties, to sell it, like fix and flip or whatever it might be, you can make double-digit plus returns on your money. That means 10% plus returns you could be making on your money doing that versus hoping you might make 7 or 8% in the stock market, and definitely not relying on Social Security to do it for you because they're just not going to keep up with inflation, with true inflation. That is where the answer lies. If you want to know how to be able to do that and do it right and do it safely so that your money works harder for you, so you don't have to work so freaking hard and so long for your money like they're saying in this article is happening. If you want that to work for you, go check out moneyripples.com. We actually got a passive income calculator to show you what's possible in your current situation right now. So check that out.